What's up, everyone? It's Caddy with Money Vesting. So quite an interesting day in the markets with the markets gapping up higher. So at one point we were up 1% on the day and then we completely rolled over, came down flat on the day, filling the entire gap lower. So we got a lot to unpack in this video, and we've got a 2-day testimony from Jerome Powell coming up starting tomorrow, for which I will be live. And make sure that you drop the like button. Of course, subscribe to the channel if you haven't already. And the link to our Discord and Patreon is going to be down below. Also, make sure that you hit that notification bell so you don't miss out on when we go live for these events. And of course, don't miss out on any of the future market updates and videos and live streams as well. Now, talking a little bit about the Discord and Patreon, of course, make sure that you do check that out as well, because we have been posting a lot of updates and alerts and videos. This is a new video that I posted about a few hours ago, talking a little bit about 5 trade setups that you can eventually end up taking. Again, these are potential setups that you can do your additional analysis on, and talking a little bit about the bond market, the TLT TMF analysis, and the 10-year yield analysis as well. So this is a 25-minute video for members only, so you can check that out if you're interested. And I also shared a balance sheet spreadsheet with all the members, and this is open to the public, so you can actually download it for free. All I ask in return is that you hit that like button, and the link for this is going to be available in my other video where we go over the entire balance sheet spreadsheet. So you can check that out, and this will go over the 9 different metrics, financial metrics, balance sheet metrics that we look for when we're analyzing for companies. Again, this is open for everyone, so you can check that out. The link's going to be in my other video. So Fed is heading over to Capitol Hill this week, and he's going to have his hands full. So this is going to be the U.S. Senate. Again, Jerome Powell is expected to begin his testimony at 10 a.m. Eastern tomorrow, Tuesday, March 7th, and once again on Wednesday, March 8th. Both of those days are going to be incredibly important. Again, I will be live to cover both of these testimonies. And the first one, which is Tuesday, March 7th, he is going to be in front of the U.S. Senate Committee on Banking, Housing, and Urban Affairs. And on Wednesday, he's going to be in front of the U.S. House of Financial Services Committee. And from our previous events, from what we know, these events can really be somewhat of grilling events for Jerome Powell, because they are not going to hold back on any questioning. They are absolutely going to go after it, and Jerome Powell definitely is going to feel the heat tomorrow. So this is, believe it or not, well, believe it, because the markets are going to be moving literally on what he has to say, and whatever is being talked about, of course, with respect to interest rates, monetary policy, unemployment, inflation, the growth, GDP, economic pain, more hikes coming, all those things, you better believe it, is going to be discussed, and the markets are going to be moving on those news. Beige Book is going to be coming out on Wednesday as well at 2 p.m. Eastern, so that is also going to be very important. So if you take a look at the economic calendar, today was kind of like a little bit muted, and then of course starting tomorrow we've got lots of data points, including consumer credit comes out at 3 p.m. Eastern, and of course this is a big labor weeks, right? So employment week, we've got not only the employment numbers coming out, but we've also got JOLTS numbers, the initial jobless claims, and then we've also got the Challenger job cut report. And, we're going to get an understanding of participation rate, average hourly earnings, and of course the unemployment rate as well. So big week, big week. This right here is going to be a catalyst on Tesla. Tesla did drop a little bit over 2%. We'll talk about it, but they did cut prices on their Model S and Model X prices in the U.S. to stoke some demand. So Model S now starts at just a little bit under $90,000, and Model X starts at just under $100,000, marking about a 5 to 9% reduction in prices respectively. Now, talking a little bit about China's growth over the weekend. So on Sunday, China did announce their objective, their goal for 2023 in terms of their GDP growth. And they are taking a very cautious approach. They're only guiding for around 5% growth in GDP for 2023, which is very a modest increase in of course that GDP number, considering that China is considered as a high growth economy, and very modest increase in fiscal support as well. So the government's conservative growth of 5% in 2023 recognizes that the pickup in China's growth continues to face headwinds, and consumer demand or consumption is going to be the key for driving this growth here. So consumption can become the primary driver for economic growth this year. And he added the commission has many tools to boost consumer spending. GDP only grew by 3% last year, well below the official target, as COVID controls on the real estate slump dragged down growth as well. Retail sales fell by 0.2% in 2022. So retail consumption needs to start to come back in order for China to grow and of course hit their target. But 5% is what they're looking for. In 2022, of course, China grew 3%. The United States expected to grow by 2.1%. We're going to get those third and final estimates for GDP at the end of March. By the way, I will be tweeting out the entire calendar. I'll be talking a little bit about some of the important dates that are coming out in March so that you can kind of save that tweet and, of course, pay attention to when the important days occur in March 2023. Now, this right here was also a really interesting catalyst. There is going to be a new bipartisan Senate TikTok bill will be unveiled on Tuesday. So once again, the bipartisan bills related to TikTok bans are kind of resurfacing because of data and security issues. So a bipartisan Senate bill to give the president the authority to respond to threats posed by TikTok and companies like it will be unveiled on Tuesday. The precise text of the legislation has not been released, but Warner suggested the scope of the bill will not be limited to TikTok, which is owned by Chinese tech giant ByteDance. And the idea of using legislation to address the national security concern over TikTok has gained steam in recent months as talks between the company and Biden administration foreign investment community have stalled. So again, we'll see what comes out on the other end with this. But of course, we know that TikTok is banned on all government devices, and recently even Canada, banned TikTok on government devices as well. So they're kind of following that same path. Of course, it's banned over here in India. It's banned in a lot of other countries, Afghanistan, Pakistan. So we'll see what happens eventually with the social media company. Anyway, so Tom Lee once again coming out with his bold thesis and talking a little bit about how this is a very much a denial phase for investors, for most strategists, and many investors and strategists are pretty much talking about this as being a sucker's rally. But he shared a chart of 2009 and 5 months after the bottom. He says equities are rising for 6 months now, and pundits call for new lows ahead. FinTwit is strident bears and snark. Likely many raid sold at October lows, and we get harassed. Quote, when will Tom Lee give up? In 2009, 5 months after March 2009 low, pundits deemed stocks suckers rally. But of course, this right here was, we know what happened. I mean, 5 months after the low, that was indeed the low, and the market just kept on drifting higher and higher. So 2009, 5 months after bottom, still viewed as, quote, suckers rally. Now, there's some truth to this, and there's also a lot of criticism to this. So again, I'm going to play both sides. I'm going to tell you guys what is, I think, good about it, what is also not so great about it. So the good thing is that the technical itself, right? I mean, yes, the market's pushing higher from its 5 month low definitely does suggest that the bottom's already in just from a technical standpoint, and it's going to take a lot of liquidity. It's going to take a lot of selling pressure for the markets to rotate back down and start to hit down to its new low or its lower limit. Now, the criticism or the fact, why I think that this is very much not the best way to analyze is because if you look at 2009, we were already like past the recession, right? 2007, 2008, and 2009 were pretty much the 3 years when the great financial crisis pretty much occurred. And towards 2009, if you're looking at what month are we looking at here? So we are looking at March of 2009, right? That was pretty much the low of the great financial crisis, right? Great financial recession. And most of the recession part of it was behind us, right? We had unemployment spike up to 15%. We had productivity coming down, retail sales, consumer spending, everything was pulling down and contracting. So we were already past those things, right? The recession was, quote, behind us, right? So yes, the markets were going to be bottoming out around during a recession and then start to push back up eventually in expectations of a brighter and better future, right? Because the markets are nothing but a forward-looking sort of tool, right? So markets are trying to discount what's going to happen in the next 12, 24 months. So in 2009, obviously the market was expecting things to get better in 2010 and 2011. But this time around, it's a little bit different, isn't it? Markets have already, of course, hit lows in October in 22, but we haven't even seen a recession, right? We haven't even seen unemployment spike up. We haven't even seen retail sales to drop. We haven't even seen a lot of the economic data to deteriorate. So if and when those things actually happen, it is possible that, consumer spending starts to pull back, and then at the end of it, eventually earnings start to get affected and come down as well. So I think that is something that we need to certainly be looking at. And then again, another potential criticism could be that, of course, we're cherry picking the data. I mean, we can look at any bottom in hindsight and then call it, hey, the market started rallying 5 months later here. and everybody was calling it sucker's rally, that was indeed the low, and then kind of comparing it to 2022, 2023. So you really have to kind of, give a little bit of context and some perspective on what that actually means. Sure, the technicals are lining up really well. I mean, we're still, pushing higher. We're still higher from our October lows. I mean, the market's, I think, still up 15, 16% from October lows. Nasdaq's might be up like 19, 20%. But that doesn't take away from the fact that the macro picture is still pretty unresolved. Not saying it's bad, it's still unresolved, right? The more clarity the market gets, the higher it goes. The more uncertainty there is, the lower it goes, right? The market just doesn't like uncertainty. And the more uncertainty that there is on the more economic front, the market's not going to be able to, push up and kind of break through that wall. But moving forward here, so what do we got? We've got the markets with Apple pushing higher, up almost 2%. Google was up 1.6%. In fact, we did have a trade idea on Google doing really well so far. So you can see up another 1.66%. This is the entire trade idea that I shared last week. And Google once again pushing up to 95.58. 3 back-to-back green days for Google, and from those levels, it is now already up a little bit over 6.7, almost 7%. So again, if you want to get access to all the trade alerts, binds alerts, options alerts, and of course, private videos on trade ideas, link's going to be down below. We'd love to have you on board. We got over 3,600 members, part of our Discord, talking about fundamental and technical analysis all day long. Now, markets here, like I said, very, very flat, and of course, gapping higher and then selling off. So Google and Apple were the only ones that were pushing higher. Costco and Coca-Cola a little bit. Financials were pushing higher, but we did see semiconductors roll over. We did see consumer cyclicals with Amazon and Tesla also roll over quite a bit, and basic materials were definitely down and selling off. In terms of the market breadth, so we've got NASDAQ here, 48 stocks in the green, 53 down. In the S&P 500, 170 stocks pushing higher with 323 stocks down. So it was a little bit more leaned towards more stocks declining, but the advancing stocks were so large in terms of the market cap, such as Google and Apple and Microsoft, that the market pretty much ended up being flat. So we weren't net negative, but instead flat here on the day. So communication services with the big gain, utilities pushing higher. We got financials, technology, consumer defenses, energy, all these sectors pushing through, with healthcare, industrial, real estate, consumer cyclicals, and materials with the big loss. Over the last 1 week, we are still green for all 11 sectors in the S&P 500. And over the last 1 month, energy is the only sector that's pushed higher, with orange juice for the win, pushing up over 3.3%. We got lumber prices, feeder cattle, coffee, natural gas, cocoa, oats, wheat, all pushing higher, with lean hogs selling off here on the day, and Bitcoin a little bit over 22,400, Ethereum just trading under $1,600. Now, another really interesting chart that was shared in our Discord, and I want to give full credit and shout out in the main trading floor, was this right here, and that is the forward implied volatility for the VIX, right? So depending on what catalyst is coming up. So for example, tomorrow, March 7th, we've got Powell testimony, and the implied volatility on a forward basis is expected to be 22, right? So right now the volatility is trading at a little bit over 18.6, right? So if you get up to 22, that's a pretty decent spike of about 20% or so, 21%. So the market definitely is anticipating a higher volatility, higher sort of volatility environment. In other words, higher VIX environment. So if it does get up to 22, that's a 22% rally or spike from here, which obviously could rattle the markets, could create some more downside pressure for S&P and the NASDAQ. And then the VIX will settle in at around 16. So that's a really volatile environment for the VIX to rally 21% and then come down to a little bit back down to 16. That's, again, very, very volatile. Payrolls, which is going to be on Friday, March 10th. The expectation is for VIX to spike to 26, and then for CPI at 32, and for FOMC at 36. So those are some key events, which obviously are going to be very important for the market. And this is what the implied volatility, forward volatility, looks like for remainder of March. So keep that in mind, because every time the VIX does spike, we could see more downward pressure on equities. Now, talking about equities here, very quickly, I wanted to go over the 10-year yield. So we did come down to as low as about 3.896%. So at one point, we were a little bit lower, under 3.9%. But once again, prices coming down, yields pushing back up, and we're back up to over 3.968%. That's one of the reasons why I have mentioned that with my TLT, TMF positions, I'm not going in with a large position yet. I do expect the yields to kind of creep up a little bit more, and the higher they go, the better the opportunities will be for bond prices, and eventually I will size up to get down to my entire full position on that, eventually expecting the yields to roll over. But right now, I'm still a little bit uncertain. I do think the yields still have another leg up, and they could easily get up to over 4.2, 4.3, even as much as 4.5 to as much as 5%. If that happens, that's definitely going to put a lot of pressure on equities. So keep that in mind. And we've talked about this in literally my previous video, how there is a fight for liquidity. There is the competition that is just getting too real and too intense and too attractive to ignore for Wall Street and for real estate investors. So, there's risk-free rates and there's risk-tied rates. And right now, unfortunately, risk-free is winning. And that's what we have to pay attention to, because it may not seem to make sense to us as retail investors because, again, 5%, 5.5%, nobody cares about that. But, big money does. So that's something to keep in mind always. So this right here was the NASDAQ kind of gapping up a little bit and then selling off after 11 a.m. So we had a 1.4% pullback on the NASDAQ. Same thing with the S&P 500, dropped pretty heavily down 90 basis points. And the Dow Jones, on the other hand, was flat here on the day. So some buyers stepping in towards the last 30 minutes, but this was the entire drop of close to 0.5% for the S&P. So going over to individual stocks here, but before we do that, this is going to be S&P 500. So quite an interesting candle, a bit of a shooting star for the S&P after two really strong green days. And resistance going to stay put at roughly around 4,100. So we got up to as much as 4,078. Valuation now sits a little bit over 18 to 19 times earnings on the S&P, still a bit too high according to my estimates. And again, we've talked about it several times in our previous videos. So we got the 200 SMA sitting right there at 39.40. So that level is going to stay put. That is a level that we're going to be kind of watching very closely. That's a 200 SMA. And if we do end up breaking down below this level, then of course the next support is going to be down to this level right here at close to 37.75 for the S&P 500. Talking about the NASDAQ, so NASDAQ also with an interesting candle, and you'll notice that the buyers were all the way up to as much as 11,800. At one point, this was a very strong green candle, but the bears were like, nope, not today, and stepped in right back down, bringing us all the way down to 11,660. So it's going to be a very interesting week with Jerome Powell's testimony. We'll see how everything plays out with respect to the market and, of course, individual stocks. But the 200 SMA is going to be the one to watch for the NASDAQ as well, sitting roughly at 11,400. And we've got this previous resistance, the lower high is now coming in for the NASDAQ as well, sitting roughly at 11K. And if you do end up breaking down below those levels, then, well, October lows are going to be the ones to watch. Next up, we're going to talk about Apple. And Apple here on the day pushing higher quite a bit, up almost 2%. It was green even more, getting up to 156. But man, oh man, did the sellers step in ahead of this testimony, and we dropped about 1.6% intraday. So lots of sellers stepping in, and this is going to be a big resistance for Apple to watch at roughly 157, 158. So this is the level to pay attention to for the stock. And of course, we're once again kind of getting rejected at that level and pulling right back down. Amazon, on the other hand, was also getting a little bit of a pullback here, down about 1.2%. So really what we're seeing is just a little bit of consolidation sideways. Resistance going to stay put at 110, 111, kind of in line with that 200 simple moving average and the lower highs. And of course, a very, very important support, and the strongest support for Amazon sitting inside this green rectangle that's in line with this previous support from back in December. And even before, if you go back to as low as March 2020 during the pandemic, Amazon pretty much validated that level. So that is going to be that support level to pay attention to for Amazon. Talking about Tesla, and Tesla here down 2% after the price cuts. Even after hours, Tesla was down another 41 basis points. So very, very significant red day here for Tesla. Well, not so significant. Tesla's been down a lot more than this, but lots of consolidation sideways inside this green rectangle. So what we're really seeing is a potential bull flag formation. We'll see if it actually ends up breaking out. But support level is going to stay put at 179, closer to $180. And of course, we've got a gap to fill all the way down here, sitting roughly in the 140s and 150s for Tesla, which I do believe eventually could get filled for Tesla moving forward. Talking a little bit about PayPal. So PayPal here on the day up 64 basis points, but a very indecisive, uncertain, and doji candle. So both buyers and sellers kind of tugging away on the price here. Pretty much closed in right where we opened, so very flat. And resistance is going to stay put inside that 200 simple moving average, sitting roughly at 82.25. And we got a gap to fill on the downside here. $70 per share is going to be that gap that eventually PayPal could come down to fill in, and a very strong support sitting at $67.50 with my fair value sitting at $70. So it's very, very close to my fair value right now. Square, on the other hand, was flat, so only down 9 basis points, outperforming here a lot of individual stocks, but getting rejected at that resistance at $82, $83 per share. So this right here is something that we have talked about in our previous videos, a very strong resistance at those prices for Square, and right now we are getting a little bit of rejection. Sellers is stepping right back in to bring us back lower at sitting roughly under $81 per share. Talking a little bit about NVIDIA now. NVIDIA here pulling back a little bit, 1.4%. So this is the entire analysis that I shared in my other video, talking about how there was a lower high and lower low pattern. And now it does seem like, NVIDIA doing really well, pushing higher, making higher highs and higher lows. But at the same time, we're kind of tagging onto its higher high. And of course, not to mention the divergence in the RSI and how overbought it really is. It kind of feels a very, very similar chart to what we saw over here. So what we basically went through for NVIDIA here is the lower highs in the RSI, and then the price itself kept pushing higher, right? So you can see how there was a very small divergence there, right? So if I remove the moving averages, you might be able to see it a little bit better. So there you go. So you got the higher high in NVIDIA's price itself. You've got the lower high in RSI, and then look what happened eventually, right? NVIDIA pretty much dropping about 26%. So I do strongly believe that this is, a very similar pattern of lower highs being formed within the RSI over here. And then you've got the price itself just continues to push through and push higher and higher. That's the negative divergence that I'm talking about. So again, you can see it pretty much identical. And if this thesis obviously plays out, then I wouldn't be surprised if NVIDIA drops like, say, another 20-30%. I could easily see NVIDIA down in the 170s. I think 171, 170 is a very reasonable level for NVIDIA to come down to, especially after getting that negative divergence, and the valuation itself just seems a bit too stretched. Talking about 21 times sales here and 70 times earnings. Pretty crazy in this market environment. Talking about advanced micro devices, and AMD also pulling back a little bit, 0.44%, so trading just over $81. It's also got a very nice uptrend going on, so higher highs and higher lows, and the resistance is going to stay put right here. That's the higher high, and of course we got a higher low sitting right over here for advanced micro devices. Talking about now Meta, and Meta here on the day up a little bit, well, down slightly, 19 basis points, and getting rejected at around 186. So this right here is going to be that level of resistance that we have talked about. So getting a rejection there, pulling right back down. Got a gap to fill on the downside, sitting roughly between 153 and 167. And we did pull back here, but then Meta also pushed right back up very nicely, up 10-11%. So lots of consolidation for Meta right now, and resistance is going to stay put at 187, 188 for this company. Talking about Netflix, and Netflix here on the day was down 1%, so coming up to its higher low. So this right here is the higher low for Netflix. It's a little bit of an opposite chart than NVIDIA. It's also an uptrend, so doing really well with those higher highs and higher lows. Big resistance sitting roughly at 375, so getting a bit of a rejection there. And we've got a higher low sitting right here. So if you do get a bounce here, considering how oversold the RSI and the MACD is for Netflix, I really wouldn't be surprised if you do get a little bit of a bounce back up and get a retest back up to 350s and 370s for NVIDIA. Talking about Google, as we have already gone over, Google with a very nice reversal here and pushing right back up. The target still stays put at roughly 105. We've got the 200 SMA sitting roughly at 102, 103. $103 to be precise is where we are. So that those are going to be some targets to watch for Google, considering this potential uptrend here, considering that reversal trade that we have going on. So congrats if you did take this trade on Google. And talking about Microsoft, and Microsoft on the day also pushing higher a little bit, 62 basis points, but once again, a shooting star candle, definitely suggesting that sellers are stepping in. Bears are not letting the bulls get out of this sort of range. And resistance kind of 300 SMA sitting 265. My fair value obviously a lot lower, sitting roughly in the 200s, but I will be incorporating AI into Microsoft's future, and then we'll see where the intrinsic value ends up being. Last but not least, we got Shopify, and Shopify here on the day was slightly flat, up just over 18 basis points. Lots of consolidation and going sideways here. 41.35 is going to be that support, with a gap to fill on the upside, sitting roughly in the $49 to $50 per share. So hope you guys enjoyed this video and a complete update. Lots of data points coming up, and don't forget testimonies from Jerome Powell tomorrow and Wednesday. I will be live to cover those. And as always, if you enjoyed this video, found it helpful, make sure that you drop a like, subscribe to the channel, and the link to our Discord and Patreon is going to be down below. You can access our balance sheet spreadsheet for free. Download it. It's on the public domain. I've put the link in my other video. And of course, not to mention that the trade alerts and private videos also available for all the members. So make sure that you do check that out. Link down below with a 16% annual discount is still available. As always, happy investing, and I'll see you all in the next video.